What is the Heikin Ashi technique? The Heikin Ashi technique is a Japanese candlestick-based technical trading tool that uses candlestick charts to represent and visualize market price data. It is used to identify market trend signals and forecast price movements. The Heikin Ashi method uses average price data that helps to filter out market noise. The absence of market noise results in a clear illustration of market trends and direction, which helps determine potential price movements. The trading technique assists traders in identifying when they should hold on to a trade, pause a trade, or identify if a reversal is about to occur. Traders can adjust their positions accordingly, i.e., either avoid making losses or lock in a profit on the chosen position. The Heikin Ashi trading technique was developed by Munehisa Homa in the 1700s. The technique shares some characteristics with the traditional candlestick charts used in trading but differs in how the values for candlesticks are computed. In Japan, the word Heikin means average or balance, and the word Ashi means bar or foot. And quad. Hence, Heikin Ashi means average bar, resonating with the trading technique, which uses the average price of the security. The main difference between the traditional candlestick chart and the Heikin Ashi chart is that the latter uses a modified formula based on 2-period moving averages instead of open, high, low, and close prices. Hence, the technique generates a smoother chart, making it easier to spot trends and reversals. The Heikin Ashi charts also obscure gaps in some price data. Heikin Ashi formula. When calculating the Heikin Ashi formula, we use the open-close data from the previous period and the open high-low-close, OHLC, data from the current period. Modified OHLC values are displayed as candlesticks, where Heikin Ashi 1, prior period figures 0, current period figures. Heikin Ashi data can be of different time frames, i.e. intraday, weekly, or monthly, etc. The open is always set to the midpoint of the body of the previous bar, and the close is calculated as the average price of the current bar. The high is the highest value among the current high, open, and close. Low is the lowest value among the current low, open and close. Constructing the Heikin Ashi chart. The color of the Heikin Ashi chart candles is usually red during a downtrend and green during an uptrend. However, different color variants have been known to be used. The indication of a potential change in the trend is given by a change in the color of the candle. The Heikin Ashi chart has smooth directional moves with more successive bars of the same color, which gives a clearer picture of price movements. The Heikin Ashi chart shows a few differences from the traditional candlestick chart. The traditional candlestick chart pattern changes colors from green to red and vice versa, making it difficult for traders to interpret and identify trends. The Heikin Ashi chart removes the noise and displays consecutive colored candles, making it that much easier to interpret and identify prior price movements and current trends. Heikin Ashi indicator signals. The Heikin Ashi technique reflects the trend prevailing in the market through indicator signals. There are two main aspects of the Heikin Ashi indicator signals: trend strength and trend reversal. Trend strength. The first aspect is measuring the strength of the trend. Small consolidations and corrections may not be visible on the chart due to the smoothing effect of the indicator. Hence, in order to trade in the trend with the Heikin Ashi technique, it is advisable to use a trailing stop to widen the rewards of trading within the trend. It is recommended that a trader should stay in the trend to profit from it if the trend is strong. Below are the different kinds of trends for Heikin Ashi. Bullish trend, a strong signal for an uptrend shown by the presence of a lot of consecutive green candlesticks without lower shadows. Bearish trend, a strong downtrend signal is shown by a lot of consecutive red candlesticks without upper wicks. Triangles. There are three types of Heikin Ashi triangles, being ascending, descending, and symmetrical ones. If the indicator breaks above the upper boundary of a symmetrical or ascending triangle, it's very likely that the uptrend will persist. If candles drop below the bottom line of the descending triangle, the bearish trend will continue and strengthen. Trend reversal. A trend reversal signal helps in the determination of the time to exit a previous trend following trade and enter a new trend. By identifying a reversal signal, a trader is able to avoid losses by entering a new trade instead. Doji candlestick, a candlestick with a small body and long shadows. It always signals the presence of market uncertainties. When it comes to the Heikin Ashi, it signals a trend reversal. In Japanese, Heikin Ashi means average bar. And quad. The equation takes into account the price changes seen on a standard candlestick chart. Heikin Ashi candlestick indicators chart have a tendency to highlight trends and trend reversals more clearly than traditional candlestick charts, since they average price fluctuations.